Need funding for your real estate investment deal? Longhorn Investments is professional, reliable, and fast. Currently serving Texas, Tennessee, North Carolina, Missouri, Alabama, and Indiana, Longhorn Investments, LLC is a direct private lender offering short-term acquisition and renovation capital to real estate investors for both residential and commercial assets. With Longhorn Investments, you can receive up to 75% of ARV, finance up to 100% of cost, close in 3 to 5 business days, no income requirements, a streamlined, simple approval process, and no prepayment penalty. Formed in 2008, Longhorn Investments has funded over 4,000 loans since its inception and includes complementary businesses, including a title company and real estate law practice. Longhorn's wealth of experience puts them in the unique position of being able to help investors throughout all aspects of each transaction. To get started today and see why Longhorn Investments is the superior lending experience, call and speak to Lawrence Hopkins at 314-749-7616. That's 314-749-7616. Or visit Longhorn Investments at longhorninvestments.com. Longhorn Investments. Hard money lending simplified.
Universe. Media. Network. 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 Network.
Good day, I'm Samantha Smith with your United States real estate investing news. As real estate behemoth Zillow and its creation of Zillow Offers has become a direct competitor with real estate investors in recent years, many investors were fraught with the thoughts of having a lot less property buying opportunities in their own backyards. Zillow's technological breakthroughs made it so much easier for homeowners to easily sell their properties themselves online, at the click of a mouse, which previously would involve communications with real estate investors by phone or in person. Now that Zillow has decided to halt the offers arm of its operations, many investors see this as a massive possibility to regain lost market share of for sale by owner properties that was previously gobbled up by the real estate giant. Report courtesy of CNBC's Closing Bell, hosted by Wilfred Frost and Sarah Eisen with guest Rich Barton, CEO of Zillow.
So let's talk about exiting the Zillow Homes business and the home flipping as we just described it as. Is this a sort of full-scale admission that you should never have gone into that business line in the first place?
It was a really tough but necessary decision, Wilfred. And I guess first and foremost, the decision to wind down our Zillow Offers iBuying operation involves a layoff of about 25% of the workforce. And that is a heavy, heavy thing given all of the people involved and all of the work they've put in. And we're committed to a smooth transition there. So I just wanted to say that up front. But this was a necessary decision. We just determined that being an iBuyer was too risky, too volatile, and ultimately addressed too few customers, too narrow.
So I mean, I guess some could have suggested to you before you did it that it's going to be volatile and unpredictable and obviously change the sort of predictability of your earnings flow. So to what extent was this a sort of I told you so moment to some people that said that in the first place?
I'm sure there are those that told me that, and I'm sure there are those out there wagging their fingers at me right now, and justified. We went into the business as a big swing on the bet that we could actually predict the price of a home 6 months into the future and do so with a very narrow margin of error and have our hold times be very short. And what's happened is COVID happened. We've had a global pandemic. We've had a housing market that froze up initially. And now we've seen a growth rate, an acceleration rate in the housing market that we've never before witnessed in history. And as you might imagine, that has made predicting the price of a home 6 months into the future really difficult. And we're doing it at a scale that is 1/10 what it needs to be in order to get to the scale we think we need to achieve to offer good prices. So we stepped back, we assessed, we looked at the volatility in our earnings that we're reporting today, and we said, hey, we don't need to be doing this. We sit in a privileged spot in a mover's decision-making process. We get a good look at all of these movers, and we now have a whole bunch of tools that we can get them to move in a more asset-light way.
So as a result, so Bloomberg's reporting today that you have 7,000 homes to sell for $2.8 billion and that you're pitching it to all sorts of institutional investors. Can you confirm that? And separately, a KeyBank analyst said most of those homes are underwater.
Well, we have always sold the homes that we've had in inventory in all ways, including the regular market and including to these kinds of buyers. We've always done that. And we are not, I will tell you, we're not in any kind of a fire sale mood. We're not in a big hurry to sell these homes. We're going to do it in an orderly fashion. These are appreciating homes. They are real assets, and we will wind down our inventory in an orderly way. We are in a big hurry. What we are in a big hurry to do is get them ready to be sold, to get them closed, to get them renovated, and to get them back on the market.
There's no doubt that the shutting down of Zillow Offers has rocked the real estate world, as other industry analysts are also speculating on the future of real estate sales transactions. Report courtesy of Yahoo Finance Live, hosted by Zach Guzman with guest Barbara Corcoran, founder of the Corcoran Group and Shark Tank co-host.
Barbara Corcoran, of course, you know her as the Corcoran Group founder and host of Shark Tank on ABC. And Barbara, good to be chatting with you again. I mean, a lot of people have been pointing out it's difficult to fathom you could have something like this not working out in one of the hottest real estate markets in a while. But I guess there are some problems there at Zillow. What do you make of maybe the idea of that many losses stacking up?
Well, CEO Richard Burton is a phenomenal businessman. He's a disruptor. He disrupted the travel space with Expedia. He disrupted totally the real estate space with Zillow and the other brands that he owns. It's really a conglomerate. So no one really thought they could stumble. But what he did, and I'm sure he gave it a lot of thought, and I'm sure he was well advised by a lot of committees. But what he did was he went into a space that has nothing to do with finding homes for people. It's buying homes for flipping. And none of the stars align. I remember at the time thinking, what the heck is he doing that for? It makes no sense at all. And I got it because it was very appealing and tempting at the time to know that you controlled the whole house hunting market and you had access to all these sellers the moment they wanted to sell. So who wouldn't be tempted to say, hey, let's cash in, guys, and let's buy these houses? I think most of us would have reached the same conclusion. However, the part that was overlooked was the market is volatile. And that he said, I think in some press release, he was surprised the market was volatile. Well, that's real estate. It's always up, down, in between. It never stays the same. And what also happened is he never predicted how difficult it is to renovate a home, close it, and put it back for sale. And that's the juggernaut in this whole thing that he couldn't get past. And that really has been the problem that he has. Great concept. But for anybody who's renovated a kitchen, you know how hard it is to get a contractor. And in these days, finding help is impossible. So he really bit off a lot more than I'm sure he ever envisioned that he would have to chew.
And it sounds like you're kind of confident still in the platform itself. Sounds like this was just a bit of a misstep in terms of rolling this out and really leaning into Zillow Offers a bit more than the company should have. So, I mean, would you be still confident in what Zillow can do here in terms of turning this around and getting out of it?
You're reading my mind. I was thinking about that this morning, thinking, hey, is this a great time to bet a jump, something that's discounted? I think it's close to 30% since 6 months ago. What an opportunity when someone controls the market. I mean, who could argue against that? But it depends on the cost of carrying those houses, which they plan to sell to institutional investors. It really depends upon how deep that inventory really is, how much cash is being drained. And I don't think we have those numbers yet. So it's a question of, is this the problem over now? They're not going to do it anymore. But what about the old problem? And what's it going to cost the business to really unwind that? So I'm not sure they're out of the woods yet. I'd be too hesitant myself. I'm sorry if I look like a scaredy cat, but I am.
For our quick content suggestion this week, we have How to Win a Real Estate Bidding War from People Who Have Done It from MarketWatch. To research further, see links and more from these reports in the news notes. If you'd like to get started in real estate investing, download our free guide, 5-Step Beginner's Guide to Real Estate Investing, at UnitedStatesRealEstateInvestor.com/free guide. That's UnitedStatesRealEstateInvestor.com/free guide. For more news and other great real estate investing content, follow us on Facebook, Instagram, Twitter, LinkedIn, YouTube, and TikTok. I'm Samantha Smith for United States Real Estate Investor News. United States Real Estate Investor, helping you achieve financial freedom through media, networking, and knowledge. UnitedStatesRealEstateInvestor.com.
Let's face it, your property is ugly as ARS Construction does it right. From roofing to exterior to all your interior needs. For a free roofing estimate, call now at 844-445-ROOF. That's 844-445-7663. Or visit AdvancedRoofSYS.com. That's AdvancedRoofSYS.com. ARS Construction, roofing and construction done right.
Universe Media Mastering. Your audio more listenable.